This presentation is about the results of audit covering our public non-financial corporations, known as PNFCs, for 2014-15. Our audits provide the users of financial statements with independent assurance that they are reliable and comply with requirements of legislation and relevant accounting standards. Public non-financial corporations include government-owned corporations and statutory bodies that operate mainly across the energy, water and transport sectors. Most PNFCs sell goods and services on commercial trading terms. They pay taxes and return dividends to the state government. In our report, we discuss the results of each sector's audits for the reporting entities. This report also summarises the combined results for all PNFCs to better understand how they affected the financial aggregate for the state for 2014-15. We report on the audit opinions we have issued and also on the timeliness and quality of financial reports. We issued unqualified audit opinions for all PNFCs entities. This is consistent with 2013-14 and confirms financial reports have been prepared according to requirements of legislation and relevant accounting standards. In forming our audit opinions, we must resolve any key audit matters we identified during an audit to ensure the financial report is not materially misstated. A key matter we encountered across all sectors was the financial reporting of non-current assets. Queensland's PNFC sector operates and maintains $57.1 billion in property, plant and equipment. At $48.8 billion, infrastructure represents the most significant component of PNFC assets. Energy holds 51% of this, with water making up the second largest component at 23%. In the PNFC sector, valuing assets is complex. Valuations rely on management making appropriate assumptions and reasonable estimates. Overall, we found that the methodology and approaches used by PNFC entities complied with accounting standard requirements and our view of generally accepted valuation techniques. Part of our financial statement audit, we examine assumptions used by management about the remaining useful lives of their property, plant and equipment balances. From the data collected this year, we profiled the remaining life of infrastructure assets across each sector. The key matters affecting the financial results of the PNFCs related to the energy sector around restructure of businesses and the accounting treatment for under-recovery of revenues. On 29th of June 2015, the network entities received a shareholding minister's direction requiring the payment of special dividends totalling $3.13 billion plus 100% of net profit after tax, totalling $1.36 billion for the financial year. The payment of special dividends by networks will substantially increase the gearing ratios. We found the treatment of dividends by network entities to be in accordance with legislative requirements and accounting standards. The Australian Accounting Standards Board position on rate regulated activities saw network entities de-recognise $1.48 billion accrued under the recovery of revenue this year. Now, revenue is recognised in income statements when it's billed, rather than accruing for differences between revenue caps and actual electricity consumed. In forming our audit opinion on the financial report of each entity, we must assess its ability to operate as a going concern. As part of this process, we assess its financial performance, position and sustainability. PNFCs have been and remain financially sustainable in the short to medium term. The longer term financial sustainability of CS Energy, SEQ Water, QR and Stadiums Queensland remains dependent on a number of pricing, funding and other business factors. The sustainability of energy networks is dependent on future revenue allowed by the Australian Energy Regulator, the ability to adapt to the new dividend ratio and future directions given by shareholding ministers. We also looked at the net flows between PNFCs and government. PNFCs pay dividends, income tax and competitive neutrality fees to the government and receive community service obligation payments grants and net equity contributions from government for selected activities. The PNFC sector provided total net returns to government of $3.69 billion in 2014-15 compared to $1.6 billion in 2013-14. The energy sector was a main contributor of funds flowing to government, returning $4.58 billion in declared dividends. QR was a main recipient of funds from government, receiving $1.53 billion for transport services it provided this year. We trust this presentation has been of value. The full report can be found on the Queensland Audit Office's website. Thank you.